following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we're coming back here to the Diagnostic Trading Hour. So we got some volatility in some markets and not so much in others. NASDAQ a little bit choppier. Russell is trending away. And we got some news that we can check out. Had a pretty cool time yesterday. So I was out at my daughter's school, and they do a little program called Watchdogs. And it's basically where dads volunteer to come up, and we do like door checks, make sure everything's locked, because everything has key passes now. And but also we go around to different classrooms. We help out teachers. They sign up and have us come in for 30 minutes. So I did math drills with kids, one class, and my daughter's class, I read a book to her class, and we went over like interesting facts about different animals, and because they're doing they're on their whole zoology thing. So they're going through and talking about that. They're about to go to a trip to the zoo here in a few weeks because they're studying, carnivores and omnivores and, herbivores. And so we went through all that and worked out with projects. So that was really cool. And then I found out a really good bonus is it was Teacher Appreciation Day. And so that's the day that the Watchdogs all get together and they do this massive cookout for the teachers. So there's all these steaks being made up. So I got to help make steaks for them, and of course got to have steak. So that's definitely the day I need to make sure I always volunteer for in the future as well. But it was a good time, and it's just pretty cool, to get the dads involved. And your child gets a shirt, you get a shirt, they take your picture, put it on the wall, and they get to wear the shirt all day, and they get to be line leader everywhere. And so I think it's just a cool initiative to get dads involved in the schools. But let's see here, what do we got as well? Let's check out this sort of our market summary wrap. And let me put that up on the screen for you. And we'll catch you up on that, and then we'll go into some news. And what news we got coming up? We got NFP. We got the employment change, the big number, coming up tomorrow. We have a couple other numbers tonight. We had jobless claims that came out this morning. Talk about that, unemployment claims. Came in worse than expected on the markets. Did drag the markets down a bit. Came in at 344,000 claims and an expectation of 317. Last number was 330. And that's actually a little bit higher. Got revised up from 329. So they bumped the last number higher on claims. And this one was worse than the expectations. We also had Yellen. She decided to do a little speech today. So she was speaking at the Independent Community of Bankers. And let's see, she apparently was behind tailoring supervision of the community banks. But nothing major coming out of that. And let's see, we had French bank holiday today. We had German bank holiday today. Italian bank holiday today. Switzerland had a bank holiday today. That quiets things down, especially last night. If you went in and you were trying to trade on a lot of the FX markets, on binaries, you didn't see any premium. Holidays. Don't be surprised. Premium should be pretty shallow. It's not a Nadex thing. It's how implied volatility works. There's not a lot of implied volatility when the biggest, major economy there, Germany and the EU, is on holiday. And so what is it? The European Central Bank's trans-European, the target system basically is down. So they have Labor Day, and I want to say that's you got Labor Day in France, you got Labor Day in Switzerland, and you got a Labor Day in Italy. So anyway, so obviously that affected euro currencies, and which really affects everything, just like the dollar affects everything, because FX is just one big triangular web of it's a massive web of triangles. That's all it is. Anyway, so don't get surprised whenever things are closed. Now, as far as what we did have is the pound had a little stuff going on. It had the manufacturing PMI coming on out. That came in at 55.3 and an expectation of 56.7. And let's go ahead and I'll throw that up there for you first. The expectations on the pound, but also let me get a chart up for you. We'll walk through it and look at that. And then once that chart loads up, I'll share it over on the screen with you. And again, that's a manufacturing and construction PMI both, and both coming out at the same time, which is one of the things we talked about. Not the most usual thing that we have happen, because usually they don't get both. They usually released on 2 different days, one day after the other, but we had both at the same time. However, what we saw consistently over and over again, not just the biggest of moves, but big enough on a consistent basis that you probably could have some good profits. Let's look at it over here, walk through the trade with you, so you can see how you could have taken advantage of it over on Nadex. And like I said, it's not the biggest one, but it's a decent release usually. And so we go over here, we get a high right there, 35 pips. So good enough that you actually can get some implied volatility in there and take advantage of it. We go over here at 12, we take that to the high. The reason I say 12 is a lot of times I'll hop in these trades at midnight. Go to 12, take that to 7 a.m. because that's usually when the expiration is you're choosing. 23 pips. So with that manufacturing and that construction PMI, I want to say both of them were coming out, if I'm right on that. Unless they bumped it. But they just rolled them in. But anyway, so with all those reports coming out, you're actually able to do premium collection. You're able to buy a spread below, sell a spread above. It's really a simple trade. You put it on, you can set a small take profit, like close to the floor ceiling of the trade, and go to sleep. So that's it. You have defined risk, and you're basically letting time pass as you sleep, and you're making money on time. That's all there is to it. And we'll have to do some more, I'm sure, do some more webinars, really radio shows. We walk through all that stuff step by step for you, help you get it all down. But it's pretty simple. So there's just not a whole lot to it. And you just got to make sure you know which ones to do it on, which ones to avoid, which ones to straddle, strangle, which ones to do condors on, what the right price is. The scanner, massive difference in helping you find these things quickly. So I'd say that's a big piece to really making it work for you. And let's see, what else do we got? So tonight, China is going to have a bank holiday. So what do they got? They got Labor Day too? Yep. So they'll be on Labor holiday. That'll be, that'll have an impact. But there'll be so many other things happening that I'm sure there'll be enough activity going on. We're going to have household spending coming out of Japan tonight. That'll add a little volatility. And then let's see, we got new home sales coming out of the Aussie. That's interesting that they have a pending release on their new home. Let's see here what their regular time is. I'll look at all the historical ones and basically see what time does it normally come out. 8 o'clock, 7:59, 8 o'clock, 8 o'clock, 8 o'clock. Okay, so this is like the basis, by the way, behind seasonality and trading. Do you see a pattern happening again and again and again? Even though it's tentative, even though it may go up, it may go down, maybe a minute later, maybe a minute sooner, got some decent probabilities that it's not unreasonable to expect that it might be released at what time. There's a couple of, random, 7:38. Now 9, by the way, we're changing time zones. So that's why we're on 8 o'clock now. Back on the other time zone again, 8 o'clock, 8 o'clock. So we had one that came out at 7:35. But every other one has come out at either 8 or 9, depending upon the time of the year. So if we want to really match it up, we can go look at May. So we're going to get the same month, right? And so on May, we're looking at 9. Okay, so 9 o'clock. And But again, the previous ones have been at 8, but now with the rollover, the time zone change, now we should expect it at 9 o'clock. Okay? And then we also had the PPI coming out at 9:30. So let's see, what can we do with that? Okay, so on the Australian PPI coming out this evening. And again, we got numbers coming out at 9 and 9:30. And let's see, let's say we're going for 9:30. We're going to have we're going to have 11 o'clock. We're going to have a 10 and 11 o'clock expiration. That's all we're going to have. So, if we're doing the Iron Condors, so far this is not looking like it'd be much more than that. The 10 o'clock one, you can get into as early as 8, okay? And so we got like 15 ticks. And like 10. Oh, there's barely anything on this. I have to adjust a little bit for time zones here. But like 3 ticks, 10 ticks. You know, if you go to 11, a lot of times they'll start pushing like 40 now and then. But 10 o'clock, I mean, it's easily 20 ticks. But there's really nothing past 40 if you even went to 11. So if you got $40 or less, I mean, you know, if you got $40 or more on an 11, you'd probably be fine. You'd probably break even or small profit. If you get more than that, that's even better. Probably look for about 20 ticks for 10 o'clock. So I'd be doing Iron Condor. I'd be looking at getting in as early as, okay, on the 10 o'clock as early as 8, definitely. Looking over at some of the other ones, I mean, there always could be some, you know, volatility out of the market. You can have 2 different announcements because you could have that new home sales impact the market. I'm just trying to see if there's any new home sales that and a massive move. I wouldn't hop in right at 6. I see enough consistent movement. Yeah, it looks like about an hour before. So, I mean, we're talking really 8:30. If you're really going for that flat market, 8:30 is actually going to be probably more consistently your better time. Because when I look at all the markets here, I do see some volatility. And you may end up getting caught in that volatility and catch 20 pips of it, and then maybe 20 pips more, and you make nothing. So, about 8:30 actually looks like the ideal entry time for 10 or 11. Now, I'm 11, you're going to want more money, okay, on the trade. Well, that gives you the Aussie for tonight. We'll talk about the NFP after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're coming back here to the and we're just going through several of the new strategies. We talked about the Aussie dollar and wrap that one up. I also want to do a review. We'll go back here in a moment, and I wanted to do a little touch up on the FOMC yesterday. Cover that with y'all. Usually I'm here trading it, but we trade to spend time with the family, and so that was obviously a much better use of my day. I loved it. It's the whole point. You can't lose that focus. All right, so let's look over here, and we can see what we got. And I guess we're on pound right now. So let's go look at the pound. We got the 2 o'clock report on yesterday's release. What was our high to low? And really 11 o'clock high to low. Pretty insignificant report, 39 pips. Perfect. So well within the expected range. You should have had a nice iron condor on for that trade right there. If we go in and look at some of the other currencies I went through with you, we'll pull up, euro dollar. Pull that one up. And let me see here. Okay, so on the FOMC minutes, We got euro dollar, 73 pips is the average move. And what I said was, hey, like hop in at 11 on this thing and hold these to 3. And we just don't expect a big move. I think we'll get plenty of premium, and I don't think we'll have any kind of move that's even worth talking about. And we didn't. So right there, I mean, there's like the bar of nothingness, 22 pips. So we get a great iron condor, 11 to 3. Worked out perfectly. We hop on over here. We'll grab dollar franc. Okay? I mean, we're way below our average expectations. And, I mean, that IV is going to be built into those average expectations. And so we'll check out dollar franc. And about 55% of the time it breaks 50 pips, 55 pip average, high to low. And if we go to measure, like, what did it actually move? Obviously, not much. And let's wait for it to populate so you can see it over there. We'll also look at the weekly oil inventory report, and we'll talk about the up-and-coming NFP report and how you can potentially trade that tomorrow as well. So maybe I'll actually start working on getting the oil one going. Well, that one's loading up. And I put a lot of information in the background so I get the most accurate possible chart for expectations and movement. And so let all those keep going. And we put this back up here. We'll go over. And we got what? We got, that covers all tonight. And then tomorrow we have 1 day left. Come back to it in a second. We have anything Saturday. Looking on over at Sunday. There's some building approvals. Probably not anything major. Yen is going to be on holiday Sunday. So be aware of that. Could be some very, very low implied volatility. Could have irregular volatility, like they say, because low liquidity. So they're going to have Children's Day. And then going to Monday, Britain is going to have a bank holiday. I'm guessing they're going to have their Labor Day. May Day, okay? And then we go in, got ISM report coming out. Japan, again, bank holiday. Australia, trade balance. Pretty light day overall. So shouldn't have a whole lot of noise happening there. And, okay, so now let's dive into, we're going to have this unemployment rate, NFP, all that information coming on out. And so I want to dive into that with you, along with just how to look at the oil inventory trade. It happens every week. Okay, it's sort of a no-brainer. Every single week. And so we go and we look at it. Oh, I guess we'll have to cover that when we get back. Stay right there, okay?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. And so now what we're doing is we're going in, and it's looking at the reports we talked about. Oil inventory as being one of those reports that happens every single week. And talking about, how can we best take advantage of it. So if we look over at the oil inventory, it usually happens at 10:30 on Wednesday. And so first thing you're going to do is want to go to Wednesday, okay? And look at the expected move for that hour. And it can be pretty big. So we'll see here. All right, so right here we got 4:30, that's Wednesday. And we got the 10:30 a.m. hour. Here's the expected move. Not as big as you think it might be, but there'll be a lot of implied volatility built in, okay? And so that report comes out, but also oil moved a lot that morning, previous to the expectations. It actually had a little bit of a run right there, and had a nice move down from 150 down to 99.5, and opened back up, basically flat. The oil inventory report came out yesterday at 1.7 on an expectation of 1.3, so a little bit more available than expected. It's like somebody happened to know that and drove it down before it got there. And anyway, so boom, there's the release. You can see the big volume bar comes out, but not much happens. And we get a range right here, about 58 pips. And what you can look at doing, there's a couple ways to do this. One is look at the expected range, high to low, for that hour of the day, right? So you can just look at 11 o'clocks and see if you can pull off a a straddle pretty close to that. Chances are you can. And then also you could look at maybe one even closer potentially on butterflies. You can look at binary butterflies as a potential trade on the close to close. And then you also be able to look at some wider butterflies that are really just dirt cheap. You can put on, so if it does explode, it can cover all the profits on both sides. So if you start getting creative with this and start using expectations on close to close and expectations on high to low, then you really can put together a consistent weekly news trade. You can do on oil and natural gas. Same thing happens on Thursdays. So if we go over and flip that up, like I said, usually we have our natural gas inventory or whatever report on Thursdays. I'm trying to see, is it even on here? So usually we have that. There we go, natural gas storage. All right, 82 billion or whatever British thermal units versus an expectation of 75. And so I can pull that natural gas one up. And while that one's loading, let's go ahead and let's talk a little bit about, we're trying to get to it, right? The NFP report over here. And open that up. Start pulling some stats. NFP usually has a lot of implied volatility. It'll be very hard for you to straddle or strangle that thing. Okay? And so I often go down looking at like pound or euro pairs that are just against $50, literally, to go in and do the trade. When the NFP comes out, I mean, literally, you'll put up like $15 or $20 solid to try to go in and execute a trade on one of these. And so, what is a way to do it and take advantage of it? The thing is, FX doesn't move near as far as you think it does. Okay, certain pairs do, but a majority of the time, FX is just not the biggest mover when it comes right down to on the NFP report. Now, there are a couple times where, like I said, it'll just explode. But it's not as big as you think it is, because if I got to pay $40 or $50, okay, for a straddle, that'd mean it'd have to move like 80 pips for me to be at a 1-to-1 risk-reward loss. And I mean, I've got in these things like $60, $70 where I went and done an iron condor, and I'm like, I'd be at break-even by the time the stupid thing, if I did a straddle, by the time the thing even got to the expected move of 70 pips. So, what are our expected ranges on the NFP for the different currency pairs tomorrow, and how can we use those to help us put these trades together? Or high to low ranges that we want to be looking at and trying to get a premium to ideally cover this. And now this is over 2 years, okay? And it's pretty high, but I've been seeing that actually drop off quite a bit. But you're looking at about 100 pips on euro, the pound, and the franc. Reality, much less. Okay, we'll go into how much less here in a second, but that's been the average. Now, that's high to low, and that's the tricky part. It'll go down 40 and up 60. Okay? We're not seeing like 100 pip up moves the majority of the time, 100 pip down moves. Does happen occasionally, but not that often. Aussie dollar, about 60 pips, high to low. Okay? New Zealand dollar, 60 pips, high to low. Dollar CAD, 75 pips, high to low. Dollar yen, 81 pips, high to low. Euro dollar is usually the one that you'd most often actually expect to break out, but doesn't. Okay? Let's see here. The other pairs. Now, if you really want to get some high volatility, let me see if I can pull up this. It's a lesson I want to do, but I know we're going to have to take like multiple shows to really pull it off. And it's how to actually build your own cross currencies. I've taught it before, but to do it for straddles and strangles can be pretty sweet and effective. But it's like Euro CAD. Okay, like usually you get like 100 pips, like the last year. One of the best pairs to do it on. If I go over pound CAD, so it's sort of interesting. Like dollar CAD, not near as impressive, but you mix those two together, and you really do get, a pretty explosive move. Yeah, dollar CAD like nothing in comparison. So, I mean, we're talking like 100 pips one down euro, and just flips back and forth. Euro, let's see, Aussie looks really solid. Some major moves there. We pull up Euro CAD next, Euro Aussie. I can't flip these things fast enough on the chart and make them render. So, out of those, looks like Euro CAD's even better than Euro Aussie. Euro Aussie's pretty good. So I can give you the basic concept of how to pull it off. But, I mean, you're talking about 100 pip moves. So if you can pull these off, I mean, you could be looking at some really, really good trades. And then the other one, a pound CAD. Euro yen actually is one of the higher ones. So if you're looking, there we go. So we'll go look at Aussie CAD and Euro yen. Maybe compare those. So overall, so far Euro CAD is pretty much beating everybody hands down. Not the pair I would think to trade, right? And then, let's see, pound CAD. It's a pretty high rating. Let's see if it beats it, which part of me would think it would. Let's see here. They're pretty much neck and neck. There's a few times the pound CAD really does sort of knock it out. So pound CAD, Euro CAD. Okay, so I'll put those two on the top of the list. And then let me check out one last pair. Actually, I guess two. I want to double check dollar CAD. But overall, like, I mean, the moves are just way too small. Usually, in comparison. So, yeah, see, dollar CAD has got a lot more volatile than it has been historically. But still not in comparison to Euro CAD, pound CAD. The one other pair, which is at least a natural cross, is Euro yen. And taking that one sort of to its conclusion, still not near as volatile as Euro CAD and pound CAD. So, what do we do? How do we pull this off? Okay? Well, if you want to trade the Euro CAD, see if we can pull this off before the end of the show here. If you want to trade the Euro CAD, you got to combine, because Nadex doesn't have Euro CAD. It has Euro dollar, it has dollar CAD. So how do you combine the two pieces together? And let's just do it. Okay, so if we got Euro USD, we got USD CAD, that equals Euro CAD. Okay, if we multiply those. Okay, so if you understand that basic concept, this goes back to your high school algebra days, okay? And what that is basically Euro dollar times, or it's A over B times B over C equals A over C, because the B's cross out. So right here, these are your B's, okay, that are being crossed out. And I know there's a marker somewhere to make that easier, but what has it got there? Strike through. There we go. We can use that one. Okay, so at the dollar gets crossed out, and we got Euro CAD. If I go over here to, say, Think or Swim, okay, and I'll open up really quick for you. We'll grab a few charts. And let's go up here. We'll put Euro dollar, dollar CAD, and Euro CAD. All right, so we're going to take all those pieces now. We're going to plug in that formula, okay? So 1.3866, 1.0963. And it tells me that the Euro CAD is 1.5203. So let's see if that's right. And it'll be off usually by a few ticks because of bid-ask spread. But, yeah, 1.5201. Look at that. So, Euro dollar times dollar CAD. Let's see. Equal the euro CAD. So, what does that mean in relation to trading on Nadex if it's not available? Well, if you're doing a multiply, that means you're buying both. So you would literally like buy, okay, a euro CAD spread. If I can type a euro dollar spread, and you would buy a USD CAD spread. You'd also sell a euro dollar spread, and you'd sell a USD CAD spread. All right, well, with that done right there, then you actually could have basically what you went long and short. Now we're going to do a straddle because we're doing boxes. But what's really cool about this is why does a pair change in price? Okay? Like a EuroCAD, what makes it change? Well, EuroCAD is basically saying that the euro is going up faster than the dollar CAD is going up, or the euro is going down, what is it, slower? I guess it's going up faster and down slower. So this is going slower. Okay, so EuroCAD, euro dollar is going up faster than the dollar CAD's going up, or faster than the dollar CAD's going down, either way. So that would going down would actually be defaulted in. If the euro CAD was going down, that means the dollar CAD is going down faster than the euro dollar is going up, or faster than the euro dollar is going down. So how do I translate that, okay, into how could this benefit me on a highly volatile FX pair? Well, let's say the market goes up and the euro CAD, let's say, flies up, okay? Well, again, that's my euro dollar is flying up, and my dollar CAD is flying up maybe some, or it's going down, okay? And then if I go over here to euro dollar, dollar CAD spread, that means that market down. That means that the dollar CAD is flying down. The euro dollar is flying up some or down some. Okay? Why does that matter? Because remember, like, let's say the euro dollar goes up and I bought this. The dollar CAD is flying up with it, like some. I'm making money on both of them. Sweet. What if it goes down? Well, then the euro dollar will be going a lot faster than the dollar CAD because the dollar CAD has a capped risk if I use the spread. So by using the spread, you actually can make even more than you could in the cross because you get the advantage of the capped risk on one side of the FX pair. All right, stay there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. I'm Darrell Martin right here on TFNN. And we're going through just talking about synthetic currency pairs and how if you buy the euro dollar and you buy the dollar CAD, you end up with the euro CAD. Euro CAD is the most impacted FX pair on the NFP report. And so how can you take advantage of that? Well, NFP can be nuts. Just because it's the most impacted doesn't mean you know what direction it's going to go. Okay? Obviously. So what can you do with that knowledge, that information? I mean, this thing will fly, like when I say most impacted, I mean, it'll fly up 80 pips and back down 80 pips within a matter of 15 minutes. Okay? I mean, it's really, it's just a massive, massive move. And so to help you take advantage of that, hedge that risk off. There's a couple ways to hedge that risk off. One, you could, if you wanted to, go directional, as crazy as that sounds. But you could hedge it off with a really low risk. Like you could buy, and this is what people don't think about this, you could buy the FX pair, and then you could sell the euro dollar and the dollar CAD spread. Right? So you could do that to hedge off. Or you could do a straddle. You could buy the euro dollar and dollar CAD upper spreads and sell the euro dollar and dollar CAD lower spreads. Go both directions. And really looking at these trades, you're going to get the biggest pop, okay, the majority of the time I'm looking at pound CAD and Euro CAD, both of them. And you really got your biggest pop in your first 15 minutes. There's a couple times where, let's see, still got it there, about 15 minutes, and, I mean, you can trail 15-minute bars if you wanted to. But you really, about the first 15 minutes or so, I mean, you really got your pop. And then it settled back down. A few times you got a little continuation of a move. But I'm surprised to look at how many of the FX, when this comes out, how it will pop that first 15 minutes. And there's quite a few of these reports, actually, to where you'll see it reverse on the deck. And that's the low. At the spike, I mean, I'm looking at, like, you know, whatever direction it closed in. And the spikes of that on all but just a few of the days in the past year have actually called the high-low of the day. So that ought to be a clue for you that, you know, if you could take that profit and get out there or whatever, if you decide to do a straddle strangle on it, but that'll have to be the high-low of the day. It'll usually come back to the spike. That's another thing to be aware of. Like, look at a 15-minute chart. Let that thing close out. And a lot of times it'll go back. It'll touch or get close to that spike again. And if it does, then it'll pull back off of it. So, I mean, there's a few trades. You know, say it spikes down 80, comes back and closes 60 down from the release. It'll go back down like 75, 78, maybe 80 pips. It'll pull back up to 60 again. So, there's a lot of ways you can play it. But, I mean, you got about 15 minutes of movement and then nothingness for the rest of the day. I mean, there's 20 pips of nothing. On just about every single release. I mean, there are some exceptions, but there are few exceptions in the last year where we get more than about a 20 to 30 pip move after the first 15 minutes on the rest of the day. And those are the most volatile pairs. If we go over, we throw it on things like Euro Dollar, Dollar CAD. They take a little bit longer before they settle down. But by about 10:30, pound dollar, Euro dollar, all that, nothing's happening. It's just quiet as can be after NFP on Friday. And often, you know, within the last 15 minutes. But just be aware of that by 15 minutes to 11 o'clock somewhere. Market's going to go flat. Don't expect anything. Check out some other premium collection. See you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.